Hello, I hope you're all well and thank you for joining this Mortgage Solutions Masterclass in partnership with the Green Finance Institute. I'm Shakina Tuahene, Deputy Editor at Mortgage Solutions, and today I'm joined by Chloe Timperley, Green Mortgage Campaign Lead at the Green Finance Institute, who will be presenting today's session. With the change in government, the Green Agenda appears to be firmly back on the table. Labour has proposed to introduce a 2030 deadline for privately rented homes to improve the EPC to at least a C. The government is also consulting on EPC assessments themselves with a view to make them easier to understand and include more metrics to measure the performance of homes. With some of this in mind, Chloe will cover how the landscape of green home finance has changed, the benefits of sustainable home improvements for consumers, and the impact of regulation and government policies on this part of the market. There will be time for a Q&A at the end of the presentation, so please do submit any questions you have on the box on your screen and they'll be answered at the end. And now I'll hand over to Chloe. Thank you.
Hello, so welcome to this Masterclass episode on Beyond Green Mortgages, understanding the wider green home finance landscape. Thank you very much for joining me today. I will just begin by saying a little bit about the GFI. So we are now approaching our 6th year, having been founded in 2019 off the back of the Green Finance Task Force. And essentially, we are an independent advisor to governments, philanthropically funded, and we sit at the nexus between public and private. Our role is to accelerate the transition to a clean, resilient, and environmentally sustainable economy. And our main mechanism for doing that is to blueprint, test, co-deliver, and scale financial solutions to rise to the net zero challenge. We are largely based in London, but we also have offices in Spain and Denmark, and we're currently expanding into other countries like Belgium and Brazil. We primarily work sectorally, so that's across a range of sectors, including transport, nature, local government, new energy, and of course, built environment, which is where my work stream sits. So as mentioned, I am the Green Mortgage Campaign Lead, and it's my role to empower the financial sector to take a more proactive role in unlocking sustainable homes for the mass market, and really that finance first approach, so that we're not the last to know in the retrofit value chain as to how this is all going to look for the end consumer. And you'll see why as we go through this session. So again, as been covered off, the objectives of today are to do with the wider home finance landscape outside of green mortgages. And you might think, why did I decide to do this and talk about everything beyond green mortgages? But I think it's because there are many moving parts to the retrofit value chain, not just within the financial world, but outside of it too. So given the complexity of a broker's role, there's going to be a need for a bird's eye view of this landscape to be able to advise on your specific territory. I think particularly in light of consumer duty and the cross-cutting rule to avoid causing foreseeable harm and enabling retail customers to pursue their financial objectives. You've got to be able to put customers in a position to make informed choices. Therefore, some knowledge of what's already out there is going to be necessary. I also have my own objective, which is not to bore you. I know sometimes this topic can be a little dry, but the reason it's so important is you may have heard me banging on before that 23% of greenhouse gas emissions in the UK come from buildings, but in fact 65% of that across domestic and industrial comes from residential heating. So we're talking oil and gas boilers in homes. I think this is a really crucial point because I think your average consumer has made the connection that oil and gas companies are playing a big role in driving the climate crisis. They're going to have to take significant action if we are to stay on track for our net zero targets. But that doesn't filter down into an awareness that if we are going to achieve that, we're going to also have to stop buying new oil and gas boilers. So in short, this isn't just an individual household concern, it's an infrastructure shift that needs to take place. So we can't reach net zero without a shift to clean heat, and we can't shift to clean heat without the right technology and fabric upgrades for the majority of the UK's 29 million homes. It is a monumental challenge, and brokers are going to play a key role in preparing homeowners for this shift. So I'm actually starting as well, outside of finance, outside of the technicalities, and it begins with storytelling, because I think so far we haven't necessarily been telling the right stories around this, because when we always frame this, it's in terms of the cost. And this cost is then posed against this other hypothetical scenario that is called do nothing. And I think in this scenario, there's a idea that do nothing doesn't carry any cost, that we can just continue with the status quo and nothing will come of that. But in fact, climate-related events are now costing the global economy $143 billion a year. And also cold homes in the UK have been linked to 28,000 excess deaths per year. The frequency and severity of storms and flooding is also increasing. And even when we look at payback periods for the difference between switching away to a new clean heating system, that's based on the assumption that the energy mix is going to stay the same, that electricity is going to remain more expensive than gas, when that might not necessarily be the case. And if we manage to pull this off, it probably won't be the case. So even the projections we're making aren't giving a full picture of what's happening and what is likely to happen. So people need to be aware that do nothing carries a cost, and there may be benefits as well of getting ahead of the curve. Now, if you've heard me talking about this in the last year or so, you may have heard me banging on about the wins and, trying to hype up the positive news story that has been the growth of the green mortgage market. So 4 to more than 60 products in the space of 5 years. Now we've got the majority of lenders offering green mortgages, so green is becoming a part of the mainstream and not siloed to this kind of niche product set. We also have 2 in 3 homeowners planning some sort of green heat home improvements in the next decade. And that's actually 23% for the next 12 months. And it's an incredible improvement because, in 2022, only 7% they were planning on doing something in the next 3 years. So we've got, if not, a incredibly buoyant market for green mortgages, we certainly have the desire from consumers. But of course, all of this has an underpinning flip side, which is the elephant in the room: very low demand. We don't even actually have quantitative data on this topic yet, because we don't have a standard definition of what constitutes a green mortgage in terms of the common terms we should be using, the subtypes, and the different shades of green, different products and propositions that a green mortgage can embody. But anecdotally, from lenders, we know that demand has been low, and this is often attributed to those non-financial barriers. Some lenders have actually struggled to even throw free money at people to upgrade their homes. And I saw a story of a couple on BBC News. They were sustainability professionals. They were highly motivated, what might be termed the prosumer segment of the market. Even they were struggling to get their gas boiler replaced with a heat pump, and they were highly motivated to do it. So clearly there's something elsewhere, there's a blockage elsewhere in the value chain that finance is now tasked with going above its own finance parapet and looking to fix. But it also goes a bit deeper than the frictions involved in the journey. We're currently missing an overarching why. This report recently came out from the Energy Research and Social Science Journal, and it emphasizes the need to refocus on the emotional benefits as well as the cognitive and rational economic benefits of retrofitting. And it identifies these 6 areas around this Homes for the Common Future framework. And what has been traditionally happening is focusing our energies on the bottom 2. So financial considerations, pitched as effectively saving money on your energy bill. And also it's the right thing to do. It's, you're acting in line with your conscience if you go and do this. Now, given the sheer hassle and cost of switching to a new form of energy, this has left people cold, which is probably a big explanatory factor in why we've seen slow demand. We've also seen a little bit more focus on future resilience. You may see the word resilient cropping up a lot more in product and service propositions in the green mortgage industry. But it's still something that is relatively nascent. And when we talk about resilience, we're talking things like flood risk and mitigation against extreme weather. That's also going to be a big part of the equation. Just the other day, actually, the FCA released a report on this, highlighting that it is a key regulatory priority. So we're focusing on these areas, but there is also these other factors that we haven't really been talking about enough. And green, efficient, sustainable homes not only can have the benefit of greater efficiency, there's also the sense of energy independence. So being able to have the confidence that your home is equipped with the technology to be able to generate your own power to a lesser or greater degree, so that you're independent from whatever's going on in the headlines. It's not going to hit you in the pocket. And energy security became a huge talking point a few years ago when all of those energy companies went bust and our bills went through the roof. So this is a really big comfort factor of protecting yourself from that energy price volatility. There's also just the physical day-to-day benefits of healthier, warmer, cheaper to heat homes. Now, homes that are more resilient to the elements as well, we're going to hold their value for more years to come. So there's an asset protection component too. And more broadly, not just for your conscience in terms of saving the planet, there's also the knowledge that this is helping fuel a boom in green jobs and opportunities. Kind of a case in point here, I saw a funny article at the weekend in The Economist called "The Rise of the Net Zero Dad." And it was highlighting that baby boomer age men haven't traditionally been the most vocal group in terms of climate advocacy, but they're really interested and motivated about the solutions to climate change. You know, having a heat pump can be a point of pride, and being up to speed with the latest technology and having kind of future-proofed your home. I think that's just one example, but it does make complete sense, because if you imagine if we sold cars the way we currently try to pitch the benefits of low carbon heating. A car is almost pure liability, it depreciates quickly, has high running costs, and yet people, ordinary people on average wages, still will spend happily over half their pre-tax salary on a new car. And the reason for that is because they can see the benefits in the round, emotionally and practically. And crucially, they also have the financial solutions to help them afford it. So the way that, this is a quote from the article, the way that a homeowner makes sense of what a low carbon dwelling is and how they evaluate the benefits shapes their eventual decision on whether or not to make a significant investment in energy retrofit or not. So if we are going to overcome this somewhat fragmented landscape, we're going to need three things. First of all, clearer messages. We need confidence to know what version of the future to invest in. What is the general direction of travel? Now, it's really interesting that when the Green Mortgage Summit took place in December, I wrote my closing remarks for the day before I had heard the detail on what other speakers would be covering. And it was fascinating that my talk actually ended up touching on many of the points that were raised that day. One of those being the speed of the previous energy transition, the 60s and 70s. There was a massive switchover from town gas to natural gas and central heating systems. And they had met all the same problems that we're facing today. I heard tell of a talk by an EDF boiler engineer who was going door to door at the time to talk people round to the idea of central heating, and met with all of the same resistance and skepticism that we're now seeing around heat pumps. So this is nothing new. And yet the energy transition was enacted in the space of, less than 2 decades, under budget, and on the back of positive messaging as well. It didn't require all of this doom-laden narrative to get people to be won over to the idea. And we also heard about the speed of other big societal shifts, like how quickly the car replaced horse and cart. It's how copper telephone lines are quietly being replaced across the nation. The switch from terrestrial to digital TV. Awareness is really growing in the finance sector that we need to start talking about this as a switchover event, backed up by policy clarity from the government and their Clean Power 2030 mission. We also need compelling stories in that if we are to convince people on an emotional level, we're going to have to showcase the people that have gone through this journey and make it tangible, and make people who are, already doing this have testimonials, and be able to talk about the benefits from a first person point of view, and that it's not all just this conceptual pie in the sky, blue skies thinking, that it's real, it's tangible, and ordinary people are doing this, because it can't just be something that's reserved for the ultra wealthy in society. We've really got to all do this if it's going to work. And as a last component to that, industry is going to need to see examples of what the journey can look like. And when I say industry, I'm talking about many different sectors coming together to collaborate. I don't know if we've seen this level of cross-sector collaborative requirements since the pandemic, or prior to that, since wartime. There's this real need to kind of pull together in multiple different disparate sectors and clarify what the scope of responsibility really is. So moving on then to the actual financial solutions. This is the kind of crux then of this talk. What does the green home finance landscape actually look like? We often at the GFI talk about it as a smorgasbord. We need a range of financial solutions and not a one size fits all. And obviously the first one being green mortgages. So this is my area of focus, and I think the biggest future frontier for this, for innovation in the market, is that the timing mismatch of people are very rarely retrofit ready at the point of taking out a mortgage or refinancing. And the timing of the boiler breaking is probably not going to match up with the expiry of a fixed rate deal. So when you've got early repayment charges to contend with, and you've got these kind of fixed cycles of product terms, we need to ensure that mortgage lenders are able to build more optionality into green mortgage products, so that whenever a customer does make the transition, they can access benefits, supports, and rewards, regardless of when those I've skipped ahead there. Bit of a preview of what's coming next, regardless of when that takes place. So how can green mortgages cater better to individual household requirements? Because not everybody is going to have the same needs. An enhanced affordability proposition might be something that suits a first-time buyer who wants to buy a home that's already efficient but can't afford the retrofitting costs. But it may be different for somebody that doesn't want to move but still wants to get the benefits of a greener home. Now, the next one on the list, the big area of focus for the Green Finance Institute, is unsecured green home loans. And I've got some kind of like automatic moving forward on my slides here. So you've got spoilers there, but I'll just talk through this slide as I go through one by one. So talking about then personal loans. Now, the great benefit of green personal loans is that they offer more flexibility. So they do circumvent this issue that I highlighted with green mortgages. You don't have to be tied to a particular time to be able to take one out. But what makes a green personal loan different is that lenders must be able to certify that the funds are used for low carbon and energy efficient home improvements, which may be complex and costly to implement. So a green personal loan can have lower interest rates than a standard personal loan, and it can have cashback rewards from the lender. The other type of unsecured lending that's the very part of the mainstream is point of sale finance. So this is where there are pre-existing arrangements between the regulated, reputable lender and the supplier. There we go. I'll try and manage the movement of the slides. They seem to be having a life of their own today. So yes, there's a pre-existing arrangement with the lender and the supplier, and these products are easier in the sense that they come packaged up with the retrofit solution, so you're not having to kind of source the supplier and manage the project and different stakeholders independently. But it also comes with robust consumer protections. So this is where the lender would actually be liable in certain situations stemming from a breach of contract or misrepresentation by the supplier. Now, a third area, and this one's in pink, but this is a third major area that's currently being looked at by the GFI, is property-linked finance. Now, this is something that is it doesn't exist yet in the UK, but it is based on an idea that comes from the United States and that has been very successful. That's called PACE. And it's essentially a loan that instead of running with the individual, it runs with the land. So that means that the payment obligation is attached to the property and stays with the property even if that home is sold to somebody else. Property-linked finance is really hoped that it will get over that mismatch between people might not want to stay in their homes and move, be tied into a loan on a piece of technology. They may not be living in that home for the entire lifetime of that particular piece of technology. So this allows them to get over that upfront capital requirement to start with, but also to be able to attach the loan to something that they can then move on from when they decide to go and buy their next property. And the interesting part about this is that the new owner does take on the payments, but not the arrears if the previous owner was behind. But it does mean that if you do fall behind on the payments, you only owe the payments that you've fallen behind on. You do not owe the entire outstanding debt in one lump sum, as you would with a mortgage if you defaulted. There are also no upfront costs. So as mentioned previously, the length of the term is determined by the lifetime of the home improvements being made. So homeowners can spread the cost over a longer period, i.e. 20 to 30 years, even if they're not planning to live in the property for that long. So what are these other solutions as well that are on this list? There are also, what I've talked about so far are some of the individual household solutions that are in development. But there are also infrastructure, neighborhood, community level solutions. One of those, a big area that will be kind of the next phase of expanding the finance availability around this, is in social housing. We have a lot of mixed tenure. So there might be some private leasehold owners as well as social renters and some private renters. And how do we arrive at those tenure agnostic solutions so that it can work for everybody? And one innovative model that we've seen here is something called retrofit as a service, whereby the current energy bill that everybody is paying is sort of locked in as, okay, that's what people are going to be expected to pay here on in the future. But if the whole building is retrofitted to a standard that makes the building either close to or completely energy independent, so you're taking out a massive portion of that energy bill, then the difference between the new energy bill and the old energy bill that the existing residents will continue to pay can be a financing mechanism for the works themselves. So there's Energy Sprong operating a model like this and others that are very similar. And it works really well in the social rented sector because you have the economies of scale. You also have community energy financing models. This is an exciting area that's starting to now gain traction, but it's something the GFI has been working on for many years in that, for example, demand aggregation finance. This is where everybody on a street can benefit from bulk buying opportunities of solar panels or heat pumps or whatever the technology may be. If you can all club together, then the retailer is prepared to offer a discount on that service, on those products. And that can make it affordable for the entire neighborhood. Also, heat networks are a up and coming part of the solution that will kind of gain traction, I think, in over the coming months and years, in that this is where surplus heat from existing infrastructure is repurposed to heat homes. So funding models and financing models for those, and ensuring that, people are aware that if they are in a heat network zone, that when the boiler breaks, they have this opportunity to join the heat network instead of just getting a new boiler, that information needs to be baked into the system and the infrastructure around home energy advice. Heat as a service. Now, this is something that is also a way of getting over the upfront cost barrier. And there are different ways that this could work, but essentially, rather than paying for the technology and owning the technology that produces the heat, you would only pay for the heat as it's in and of itself. So there are proposals for leasing models on how this could work. It massively brings the monthly cost down, and it operates on a subscription model. There's also the potential for this to be paired with property linked finance, so that when the home is sold, it is actually sold with a fixed, predictable financing payment and heat as a service subscription all bundled in one. And then you, again, as I was mentioning earlier, that security, that peace of mind, not knowing you're exposed or quite so exposed to energy price volatility, is going to be hopefully a big selling point for people. And this last one here that I'll just touch upon briefly, green rental agreements. This is sort of a similar concept to the idea I said before about retrofit as a service, but it tackles the split incentive problem, because at the moment we do have this issue of landlords being asked to invest significant sums into their properties to be able to make them green. But the biggest priority for landlords, based on some anecdotal evidence recently of a focus group I was attending, that the number one thing that matters to landlords, it's not capital appreciation of the property, it's not saving some money on the financing deal, or even getting a higher rent. What landlords most value is having a sitting tenant who's reliable, who, you know, a good tenant, and there's a great relationship between the two. The landlord wants to hold on to those. So how do we navigate the issue of having to jeopardize that relationship if we are going to be retrofitting? And obviously the first idea is to do this in void periods. That makes the most sense as a kind of first port of call. But with a green rental agreement, landlords can package the cost of these improvements within a warm rent package. So that's reflective of the energy bill prior to the improvements taking place, but the actual energy bill cost to the landlord is a lot lower, or the overall cost is a lot lower, and the difference between the old bill and the new one that the tenant can pay in the form of a warm rent package then can also finance the cost of the technology itself. So this is an untested idea, and it's something that again is in kind of development stage. But I think as we start to unlock more of these solutions, we start to see the market scale, we're going to see more of these things piloted and coming into reality and working together. Now, you may be wondering, why do we need all these solutions? Why is this smorgasbord approach so necessary? And the reason for that is very simply that not many people fall into what we call the able to pay category. And quite often, government and private funding schemes that give grants to enable retrofits put the threshold for being considered able to pay at a household income of about $30,000 a year. Now, this means that able to pay is a very, very large portion of the market, but the true able to pay segment is much smaller, because there's, you know, not many people have not only the cash or the financing capacity, but also the time and energy and mental space to be able to manage a complex project like this and to educate themselves to the point where they can plan and scope out a big retrofit green home improvement project. So different household types will be matched up with different needs. So this is just a suggestion, by the way, of what different solutions could match up with different financial mechanisms. This isn't to say this is the best thing for that demographic, or that demographics not mentioned wouldn't be suitable for it, but it's just to illustrate really that this is why we need different tailored solutions, just to make sure that nobody is falling through the cracks. And then also, I think, as I spoke to earlier about the three things that we need, it's not just about having the financial solutions in isolation. The biggest part of the challenge of retrofitting is that normally financial stakeholders get to financial firms get to solve their end-to-end consumer journey. They get to be fully in control of the design process, from marketing through to completion and follow-up. And they don't have to go out and be with, collaborate with other stakeholders a little bit, but not to this degree. Whereas we are actually one part of a wider journey that, not many firms even have a concept of what does that journey look like. So what I've done here is a high level, and this is very high level. So it's not meant to be prescriptive. It's not meant to sort of be a straitjacket, but it's just to give a flavor of what this journey can look like, and also who the stakeholders might be at every stage. So first off, we talk about what is the trigger point, and there could be many different trigger points into a retrofitting journey. One of the things that I have to talk about in my conversations with Trustmark is that given that getting a heat pump, for example, is quite invasive to the property in the sense of many times you would need to replace all of the radiators with larger radiators to ensure that each room can be sufficiently heated, because heat pumps have what's called a lower flow rate than a typical boiler. So you need a wider surface area of those radiators. If you're already doing something to the property that's more extensive, more invasive, then that's a great time to raise the potential to be able to consider, alongside it, to consider green retrofitting. And also these, I would say, trigger points that are not taken up, they become missed opportunities, because who's the least likely cohort to want to be able to create upheaval in their house in order to go green? It's probably people that have just had the property rewired, or they've just had a new kitchen put in and they just want to live in their house for a bit. So we must ensure that trigger points are captured and they don't become missed opportunities. And these are just some suggestions of people that would, where that entry point may be. So there's not a one size fits all. It's not like it's always going to be the estate agent or it's always going to be the lender. It could be a range. Now, the next step, this isn't essential, but it is typically what customers tend to do. And it fits in with when you're buying any big ticket item. You don't just launch into a full scale consultation of what you can do and when. You often want a snapshot, a brief quote, a high level idea. Is this even viable for me? Is this, what would this cost if I were to consider it? So a snapshot of the schedule of works and potential costs. We've seen many fintech platforms actually partnering with lenders who provide ancillary services of these home retrofit surveys that, they're not necessarily creating an itemized schedule of works, but they're just giving an overview of what it might cost, what might be suitable for that property, and what would be the best sort of overall package of solutions that could be considered. And this could be toggled as well. You could say, well, if you wanted to do a whole house retrofit, it would cost this much, or if it was just solar panels to start with, it would cost this much. And again, many different stakeholders who could run through this step. Now, this step is what I would say should be the core purpose of the one-stop shop. Now, on the previous slide, in the middle of that second flower, with all of the financial solutions matched with different demographics, I mentioned what would sit at the heart of that is a one-stop shop. And what we mean by that is an advisory service that sits in this sort of neutral territory and can provide independent, trusted information, and also signpost out to relevant services once a decision has been made. So the first part of this is, as said, the advisory side. So once you've got your retrofit survey or your scope of works, you've had a bit of a flavour of what could be possible, you then want to go in more depth and determine the real economic viability of this stage. And I think this is actually what is probably missing at the moment, the missing link, which is why I've highlighted this in yellow. Now, there are many firms out there that are creating great fintech kind of one-stop shop services that they're integrated with all different kind of stakeholders. And, I'm sure innovation is only going to accelerate in that space. But where it's not a slight on anybody to say that I think where we're not quite getting it right yet is in being able to determine economic viability. And I think the reason for that is we haven't been putting finance front and center. This goes right back to the beginning, what I was saying about finance needs to be an integral part of this process, because not only is does the economic viability hinge on the availability of finance, whether you can get it in the first place, it also hinges on the cost. So even if you can access a loan, if the interest rate is so high or the form of financing is just unaffordable, then it still is going to, the whole project goes out the window. So economic viability is not something that just is a step right at the end. It's something that kind of has to come first. And I think this is the role that hopefully the government's Warm Home Plan, for example, and as mentioned in its manifesto, that it wants to work with banks and building societies to unlock more financing for green home improvements. Hopefully that plan will be a great opportunity to really build out something that fills this gap. So yes, it could be a local authority. Following on from, in fact, the model that has been most successful that we've seen is in international markets is in Ireland, where there has been a registered one-stop shop network delivered via local authorities and also linked to financing solutions. That has really seen the market scale massively. So, if we could replicate something like that here, we could really start to move the dial on this. But after the advisory service and help making a decision, you do need as well a signposting service, because as I've mentioned earlier, one of the biggest reasons for not completing on these journeys is the friction caused by inability to find the right suppliers or know really what the next steps are. And also trust. I think trust is a big factor in that, people don't know that the benefits are going to be realized, or that how can you tell the difference between a costly mistake and a reputable, trustworthy provider? I think if you've got a signposting service, you've then got that peace of mind in knowing that you're not being referred into somebody or a company that is going to leave you up worse off. Now, the next step. There's a reason for the little bridge here in between the two, because I put the financial solution first, in that you do have to be able to know you're going to get the finance before you start contracting people to do the work. But the service may well be connected to the financial solution may well be connected to the retrofit solution as well. We've seen it with integrated retrofit mortgages, and as mentioned previously, point of sale finance. I think there's an awareness in the financial industry that more needs to be done to kind of handhold throughout this process. So we're seeing both advisors, intermediary firms, and mortgage lenders partnering with third parties to co-deliver these solutions. Those are often either packaged together or one or the other. And then the final stage, and this is a really crucial step, but it's the completion and validation bit. So lenders and intermediaries are going to need to evidence outcomes as part of consumer duty reporting requirements. You're going to need external accreditation of the works and quality assurance sign-off, just to make sure that the green credentials are solid and they do what they say they were going to do. And this is relevant not just from a consumer protection and peace of mind point of view, but also a financial reporting point of view. If lenders are going to be reporting a certain proportion of their loan book as green, they're going to need to know that the actual benefits and that the work was done. And that the customer didn't just take the money and go and spend it on a new car or something. So all of that together is sketched out here. And again, this is something that could be subject to change. It's not the one and only way that this could work. And there are many different stakeholders that could carry out one of these steps. But I think the big thing to bear in mind is that this independent and trusted source of information to be able to advise and to signpost is probably the biggest missing link that we need to solve currently. So where do we go from here? I think the intermediary is going to play a really crucial role in all of this. So according to IRIS, 90% of UK mortgages are now intermediated. So that's a peak over the last decade, and it's been steadily rising. And I think part of that is the fact that we have this very richly diverse, but also incredibly complex product landscape. And the green mortgages market is no exception. So we do have green additional borrowing, we have cashback incentives, we have enhanced affordability, rate discounts, integrated retrofit. All of these things that aren't necessarily all available all at the same time from one lender. So it falls to you as a broker to be able to identify which would be the best solution and the most cost effective, and understanding the trade-offs. And I think there's some Bank of England research that backs this up, in that from a few years ago found that the biggest value that intermediaries bring to the market is, one, keeping lenders competitive amongst themselves, but also reducing search frictions, so the time taken to get from problem to solution, and also reducing welfare loss. So even if, we're just previous value of advice research may have focused on purely the cost savings of a good deal, but this is very much that goes beyond that, and that you're helping people avoid costly mistakes, and that's sometimes worth more than simply saving a few basis points on the rate. So the chicken and egg problem that we've seen, though, in the green mortgages space is that lenders aren't looking to innovate further. Well, they are, but they're reluctant to innovate further without clear evidence of strong consumer demand. Brokers do not want to give green advice without seeing further innovation in the lending space. So how do we cross this bridge? And what we've been saying, when I was at the Green Mortgage Advice Initiative, when I was working at Amy prior to coming to this role, and something I'm continuing to say now, is that conversation is the way to break this impasse. We need brokers to get more confident talking about this stuff. And it doesn't always need to culminate in a product recommendation just yet. According to the Climate Change Committee, 60% of households could actually spend less than $1,100 and still make a substantial impact on their home's emissions. So this is where you can go for further information. I think, brokers need this as an extra string to their bow, as a green home financing one-stop shop. And the technology that's mentioned earlier, the fintech kind of delivery partners, it hopefully will be there to streamline the broker's job and allow for more human interaction to take place. So these are the quick takeaways. I won't go through all of them because we've already covered them before, but I think I'm just going to land on the, we've done this before. We know that this is possible. We've got billions in capital behind this. There's some lenders that have committed significant sums under the Task Force for Climate-Related Financial Disclosures. And the consumer journey is complex and multi-stakeholder. We need clarity around the scope of responsibility, and finance is the real determining factor of economic viability. So it must be integral to the journey. And that concludes, this is how you can stay in touch, and that concludes the presentation section. I'm just going to end the show, stop sharing. And I don't know if we've got time for questions now. I'm sorry, I've gone over quite a bit, but if anyone does have questions that we don't have time to address today in the presentation, then I'm happy to answer as well via email.
Yes, and thank you.
I have gone over on purpose to just...
No, that's fine, Chloe. Thank you. You did cover a lot of ground, which is actually very good and informative. And we do have a couple of minutes for some questions, though. So I will go to one from Cypron, I think how you say it. So what role do you see for alternative bio-based construction materials like straw in our green home finance landscape? Are there any emerging financial products or policies that could help incentivize the ecosystem, including homeowners, developers, and manufacturers, to adopt and support these solutions, particularly for retrofitting existing homes? So essentially more sort of green, eco-friendly materials in homes. Do you know anything about that?
Wow, it's a very left of field question, but I think it's definitely part of the landscape, and it's also there's increasing awareness that carbon isn't just something that is emitted from homes, but is also embodied in the construction of homes. So under the Future Homes Standard, the carbon neutrality will have to be achieved throughout the entire building life cycle, and not just getting to the finished product of a built house. So I think the more we can use eco-friendly materials that don't have a huge carbon footprint at the start, the better we can achieve overall net greenhouse gas reductions.
Thank you. And there is another question. So we aren't seeing as many green mortgage launches as we used to. And even the ones that have come through, I mean, it's few and far between, but they're sort of giving cash back or 0% interest on a loan. Do you feel like that has impacted consumer awareness and demand for this kind of finance? In fact, there is less of it coming new and in the forefront of people's minds.
I honestly think the measure for success is no longer the quantity of products coming to market. We've seen a rapid scaling of the market, which is fantastic. But now I think the reason that products are taking longer to come out is that lenders are really putting thought into this. They're doing research and development projects. They're retrofitting houses so they can see it firsthand. They're doing it in a test and learn phase. So I think that this is a sign that it's deepening innovation is what we need now. And I think, but probably better communication as well of the existing products that are out there. I mean, some preliminary findings from our consumer research that we've been doing is that consumers have really struggled getting their heads around what is enhanced affordability. We're not going to influence consumer behavior if they don't know what it is that we are pitching to them. So I think consumer understanding, another consumer duty buzzword there, will be a big, big factor in making a success of this.
Great, thank you. And like I mentioned before, there are some reforms being proposed to the EPC, make them a bit more detailed and go a bit more to the granular sort of information about homes. But with this in mind, because so many homes are measured by EPC with lending, do you feel like that might cause confusion in the interim, and how can advisors navigate that?
I think it will really depend on the advice that the individual needs of each household. And I think that's why it comes back to ensuring that there is a service out there that is able to give independent and tailored advice, and that financial firms can collaborate with these delivery partners, because it's not for the mortgage broker or the lender to be able to say, this is the best measure for your household. But they certainly need to be aware of the wider landscape and the benefits, so that everybody who wants access to a more sustainable home can get that access.
Thank you. And I will ask one last question. So how can we protect homeowners whose properties cannot be made greener and potentially will be locked out from getting any finance?
So this is something that will be incumbent on government to solve and ensure that if there is a rebalancing of levies, for example, away from gas and away from electricity and towards gas, if gas becomes more expensive, the adequate compensation is in place. And that, as you say, if the house is not economically viable to be retrofitted, that certain exemptions are in place. And probably the biggest emitters anyway are those very large footprint houses that, underfloor heating and all kinds of all mod cons. So it's not necessarily a 2 up, 2 down terraced being part of the main group anyway, but we do have to ensure a just transition and bring everybody with us on the journey. And I'm really heartened to see so many lenders that are actively thinking about this, of environment and social together. I think the financial sector is really on the right track here, but it is a huge concern, definitely.
Yeah, of course. We have had one more question come in, if that's okay.
If anyone's still out there.
It's from Adam, and he's asking, what impacts will Trump have on all of this? He's made some comments about the use of natural gases, fossil fuel. So I guess, the assumption is that where he's talking about drilling and maybe making more use of certain energy that maybe not sustainable, how would that impact things? And, when people and businesses have more money in their pockets, they're probably likely to make more sustainable decisions. So how does that sort of play into everything?
Yeah, it's a really good question. I can't really comment on the sort of political fallout of all of this, but certainly I think it just remains as incumbent as ever on the financial sector to not only ensure that green products and services are in place and that they're available for consumers, but they are actually financially viable and that they can be delivered sustainably over the long term. So I think we shouldn't shy away from this becoming a profitable, sustainable way of doing business. And the way to do that, I think, is to make this mainstream. and show how it's not necessarily just about net zero. This is why I keep saying about beyond net zero. If you can convince somebody that energy security is a thing worth having, or, you know, a quieter, better insulated, cleaner air home to live in, then you don't necessarily need them to be a big climate advocate if there are all of these wider benefits that also make it worthwhile.
Of course. Thank you very much. And I will close there. And any other questions that do come in, like you said, you can answer them sort of after the session. But thank you to everyone watching, and thank you, Chloe, for the presentation. I hope everyone has something to take away from that and gained a bit more insight into the landscape of things. So again, thank you for being with us and take care.
Thank you.